Hi again, folks. It's 20 past 6 in the morning on Good Friday, Easter Good Friday, bank holiday in the UK, massive spreads on everything, nothing much interesting to look at. There won't be, there might be some volatility, so there might be some worthwhile trades, but you have to be very, very cautious trading on bank holidays. I've done it because I believe in my method. Many times, and people say between Christmas and New Year don't trade. Trend trading, these candlestick movements that I explain work perfectly well in weak markets, so just be careful. So Alex, you asked why I took that trade, or was it contra trend or whatever. I did explain in the 2 or 3 videos in that series that I was waiting for a long trade, the end of the day reversal trade, and then I created another video that said, yeah, we've broken the low. We had this massive spike down. Let's have a look. Take the scroll off. That spike there, and which really gave us, and I did say this, I think, there is no valid trade we can have here because the spikes are large. Even on this 5-minute chart, I could not get a low, a high, low, a high. So it was, you are correct, it was a contra trend trade, perfectly valid if we had a reversal. So you can trade against the trend. You're trading the rubber band effect, if you like, back to the hourly 8 EMA, something like this situation later on in the night of, the morning of the following day. But this method of mine came about as a result of trend trading, simple trend trading. No candlestick analysis, no candlestick trends like I have. So when I saw an M1 trend pulling back to support, test it as resistance, all these support levels, that's why I traded that. I'm sorry if I didn't make that clear in that previous video. So you can't unlearn stuff, guys. So when I talk to you about this mantra, old support tested, or broken should I say, will most likely become a test as resistance. And that's so I reverted to my old method, if you like, because you can't unlearn it. And if you know there's safe pips available, because trends are so powerful, that's why I mentioned trends in off-market conditions. The grinding period, I'm so used to trading what they call thin markets because trends are so good. I believe in them. Plus I believe in the old support broken gets tested as resistance. I was fully aware that this could easily continue down, which is why I only targeted that extreme low there. I did not expect price, or assume price, that's the lowest low there, assume price would go any further. Never assume anything. In fact, it was this low here I went for. I think the last support broken, I talk about this a lot, will get tested as resistance. It's what I call fair value. It's how I was led to believe fair value. I didn't study that, and I might be totally wrong. It's a great expression. How will we know whether that is the right price for this particular currency unless it comes back and tests it? And if it's the wrong price, the price will increase. If they consider it to be the right price for that, you could call it a stock, or call it gold. That's the easiest way. If gold is worth 2,000 at this level and people will keep buying it, then it's got more value. If the value breaks, they come below the 2,000 mark like they did here, how will you know whether people are prepared to pay 2,000 for gold unless they come and test the market? Okay, that's the clearest analogy I can make for tests and retests. Break, come back and test it. And that was the trade, simple as that. You know, you've got two rising 5-minute candles here. That's the trend, or you could treat this as a trend: low, high, higher, low, higher, high. All we failed to have was the break and well, what I teach here, to be honest with you. So this 9th trade, yes, it was a non-system trade, but it was a perfectly valid retracement trade on that big move. And there was no way to get in much earlier. I wouldn't want to be trading a 1-minute reversal. Having said that, never say never. And you know, a crazy scalper trader would have perhaps scalped to this S2, and then you know, use the same method I did. I explained on the video, just in case. This was S2, so we've got a valid trend here, bounced off that 6500 level, so the half round number, low, high, higher, low, higher, high. It broke, it used it as old resistance, new support. Once again, the opposite to this analogy, or this situation over here. This is pure support and resistance trading, guys, with trend analysis. Then you've got that that round number there. That was a no-brainer for a test as well. 197, like the analogy with gold. Is it worth $2,000 an ounce, or is it not? How will we know? Come back and test it. That's what they did there. Once that had broken and closed through on the candlesticks, that was good to go for my trade. So I dotted numerous I's, crossed loads of T's, and then, not only that, I explained in the video, this, if you missed it, Alex, this was critical. So I didn't want to trade here. You know, I'm not going to trade. These are dangerous pullbacks. All that had to do was turn red there, and you're, you know, below that level there, say, and this was definitely a potential crash. But so that's something to drill into your head. Tests and retests. It's basically what we trade, because when you're trading down here, this will be as a result of some sort of break up, and it needs to test to see whether it's support. Old resistance acts as new support. So yes, it was non-system trade, and I tried to stay away from those. That's why sometimes I might take 10 or 15 trades in a day and only post 3 or 4, because I don't want to muddy the waters. But it's important, in my opinion, to show you how this method evolved. You know, I spent 3-4 years trading this without realizing anything about the candlestick, the importance of the candlestick breaks. As I said, 2B reversals were the eureka moment. And then, as I say, with this, we've now got this. This is massive. This is a bust up. This is the pullback. The break of that high with the new high through the 20 is massive. It's only a 1-minute chart, but scalpers would absolutely cream their pants for this. So yes, Alex, sorry to go long-winded on you, but you have to, you know, just when you're learning my method, try and keep in mind how it evolved. MA crossovers, then precise 2B reversals with the MA crossovers, with a couple of spurious indicators that were sold to me. That was the initial method. MA crossovers were trends that we did the pring, high, low, lower, high, lower, higher, low, higher, high, and so on and so forth. All of that evolution, but I've never steered away from the trend. So when I see this going on, you know, I just switch into auto mode from 12 years ago or 15 years ago. So apologies for that, but I can't leave cash on the table when I know there's such a high probability of doing what I expect it to do. And I'd never assume anything, so I expected it to go higher, but I'm happy to take it to my hard and fast levels, because you can get burned so often, and I have been burned so many times I can't even count in the past when I was a novice trader. But when you see this muscle memory, reflex action, call it what you like, massive candle down, for whatever reason, I looked afterwards, there was no news or anything, so you just have to well, I have no idea why they did that. Absolute no idea, apart from the fact that they want to take out stops, bring in long traders or whatever. And then this did crash again, and I'm wondering, I didn't check, but I wonder if it went to S3, because such a big move you would expect it to. No, it didn't by the looks of it. And then finally it did actually break back up. But these moves are massive. This is a 1 minute chart, and this move here is 35-40 pips at least to the level, and then it goes on and on and on up to an old level up there, some sort of support. Notice how it tests it there, that support level that was my original target. I mean, this is no coincidence, guys. And then it tests the other two, and then breaks through and does its stuff. But these lines, this is drawn hours ago, yet it gets tested to the pip again. And then these lines were drawn hours and hours ago, and they get tested to the pip again. Finally breaks through and goes. So these lines are important, guys. Learn how to use them. Learn, you know, watch the trends as well, you know, and eventually you will get it, I promise you. So Alex, sorry for the long-winded video on a Good Friday morning, but it needed to be explained properly. Thanks for watching. Have a great day. Have a great Easter even.